Hello everyone, welcome to EduCare 247. This is the 8th lecture of Important Reports and Indices series, and this series is very much useful for RBI, NABARD and SEBI examination. In our 8th lecture, we are discussing report published by World Bank, and it is South Asia Economic Focus Report. The title of this report is The Cursed Blessing of Public Banks. So this is very important because it is dealing with our financial and credit system. EduCare 247 has launched SEBI Grade A 2020 crash course, and this crash course will be useful in phase 1, phase 2 and interview. In this course we are covering the complete syllabus of paper 2, GS of paper 1, topic wise MCQs will be provided. Our content is very concise and crisp. Live doubt session will be taken and important video lessons will be there. Right now we are giving 1000 rupees discount because of world lockdown, so it will be called lockdown learning. You can use code SEBI to get 1000 rupees discount, and you can visit educare247.com and subscribe to the course. Recently World Bank has released South Asia Economic Focus Report, and in this report the World Bank says that India will grow 1.5 to 2.8% in the financial year of 2020 and 21, and it is lowest growth rate since 1991 economic reform. The South Asia Economic Focus Report is the biannual economic updates, and it covers economic development and near-term economic outlook for the South Asia. Basically, it provides the background information and timely analysis of key indicators and economic and financial development of relevance to the World Bank. So this report is very important to gauge the economic development of the Southeast Asia. Basically, it is prepared by Office of Chief Economist for the Southeast Asia region of World Bank. It includes a focus section presenting in-depth analysis of economic topic of stability, growth, prosperity in region, and it covers Afghanistan, Bangladesh, Bhutan, India, Maldives, Nepal, Pakistan and Sri Lanka. According to the World Bank, these are the South Asian countries. It concludes the data section and provides key economic indicators for the South Asia at a glance. So these are the important facts related to this report. Let us see the key points of this report. The report says that South Asian region will grow at a rate of 1.8 to 2.8% in the year 2020. Earlier, the same report projected the growth of 6.3%, but because of COVID, the growth will be slowed down. In 2020 and 21, India will grow at the rate of 1.5 to 2.8%. Earlier, it estimated that India will grow to 4.1 to 5.4% in their October analysis. It also estimated that in year 2019-20 India will grow, and India has already grown to 4.8 to 5%. In last analysis it says that India will grow to 6%, but they have reduced the target. India is likely to record the worst growth performance in 2020-21 since 1991 liberalization. So this is very serious point. The report is saying that growth recovery will estimated at the end of 2019, but because of COVID and global negative impacts, the South Asian economy is also not growing. The report also talks about impact of coronavirus. Indian economy was already slowing because of financial sector weakness, and now we have COVID-19, so we have to deal with one more problem. Because of COVID, India is locked down, factories are shut, businesses are slowing, flights are suspended, train is also not moving. So all these things will lead to slow economic growth, and this will also result in domestic supply and demand disruption. Basically, this will lead to very slow growth and sharp deceleration in the growth. It will also impact the service sector, and that is the backbone of Indian economy. The revival of domestic investment is likely to be delayed because of this global scale risk. So these are the important point. Report is saying that. The report says that the growth will come back in the year 2020, and the global economy and India will bounce back, and South Asia region and India will grow at the rate of 5%. India is spending 1% of their GDP to revive the healthcare sector and help the unemployed people. India is running many programs to help the people for their basic need. World Bank has also suggested some important measures. India should focus on mitigating the spread of the disease because we have very low quality health services. That's why the disease should not spread in India, otherwise it will be a disaster for India. Also, India should focus on temporary jobs program, especially at the local level, so that people can get basic support. It also prevent bankruptcies, especially for the small and medium sized enterprises. So these are the suggestions by the World Bank to the India. The World Bank is supporting India as well. World Bank has already approved $1 billion loan, and the first amount of that loan has already come, and it will boost the healthcare sector. Basically, it will help to increase the diagnostic equipment, and additional testing facility will be increased. It is also working with India on 2 additional operations for employment, banking and MSME sector. So this is very important point. Asian Development Bank has said that India will grow only by 4% in current fiscal year, and SP Global Rating has also said that India will grow at the rate of 3.5% in the current fiscal. Earlier they said that India will grow to 5.2%. Moody Investor Services has also said that India will grow to only 2.5% in the year 2020-21. Earlier they have estimated the growth rate of 5.3%. So these are some important data. You can keep this data in your mind. Hope you have enjoyed the video. If you have enjoyed the video, like, share and comment and subscribe to Educare 247. Thank you and happy learning.